Is a miss, and it came back worse than expected. But more importantly here, we have a change in sentiment. And one of the things that has created that change in sentiment is, of course, the spike that we had inside of crude oil earlier this week. What that has done, and I just want to, again, reiterate how absolutely amazing that this shift that we've had in Fed Fund futures. Remember that it was not too long ago that there was actually a rate cut that was being priced into the meeting that we're 13 days away from. And then the cut got pushed all the way out into December of 2027. So a year and a half out into the future. And then a rate hike has now been pulled an entire year into the future. And these are some of the wildest swings that I think that I can ever remember inside of the Fed Fund futures. And it creates these moments of their dislocations, if you will. And one of the things that is really fascinating, and this is our regime tracker. And coming out of the beginning of April, we were screaming towards a boom. And we stalled out, and there were a couple moments here that we stalled out in mid-May. But coming out of May 20th, we were screaming towards a boom again. And on June 2nd, for the first time in 2 weeks, we took a trip back towards deflationary bust. And we were mentioning this on that morning as we were going into the beginning of the daily doldrums, that we essentially were having the very first moment in 2 weeks, and that's what this high was up here, this 1115 high. So we have now broken through a series of long setups. We have no known support, and we are inside of a series of shorts for the first time in about 8 weeks, that there are resistance levels above us. And the thing that I want to point out here, and it's a little bit easier to understand this, we have been in an environment where we've been buying dips. I've reversed the ES here. I'm putting a negative sign in front of it to kind of give a better idea. We're in a no man's land. If we were right now, if we were in a series of longs, right, we'd be waiting for a pullback to buy, right? I inverse this chart. This is the negative ES. This is what the ES really looks like. We're watching for a squeeze into resistance. So we dipped into this previous low down here and have been squeezing back up into the direction of our very first measured move short after a trend break. So there'd be nothing unusual about squeezing into resistance, right? There'd be nothing unusual about that, but it's a counter trend. It's not part of the major trend. And we've just made it above the 20 handle here. The gap fill, yesterday's 4 o'clock close, is at 75.72. The indices are very good about making it into 50% retracement shorts from highs. In fact, most of the time, they will break trend. And there's two different scenarios here as we move forward. Sometimes after we break a series, we will sell off inside of the very first measured move short after a trend break. In other cases, and many times in history, this stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.